Welcome to today's video. In today's video, I'm going to teach you how I made $2,700 with this trade right here. As you can see, it was a beautiful sell position taken on the S&P 500. And honestly, this is quite easy. We're going to run through it. We're going to start off from the top on the 4-hour time frame, and then we're going to narrow it down to the lower time frames where I show you my actual execution. So looking at the 4-hour time frame today, we can't really see there's too much going on. It looks like we had this huge impulsive move to the upside, but recently we've been moving down. We've been having this period where price is looking to come down, take out some liquidity, and probably come into a discounted price range. Now, we can see that we have this draw on liquidity right here, and I noticed that today, we may want to come down and take that out. It seemed like a very strong draw on liquidity to me, and that's why going into today, that was my target. That was where I wanted to see price come down to. Same thing on the NASDAQ, right? If we check out the NASDAQ, it's the exact same thing. We have this low, and I was literally just expecting price to sweep this out, and then we can maybe look for a move from there. So that is what my bias was looking at the 4-hour time frame. The hourly time frame, pretty similar story. It looks very, very bearish. We can see that we have this bearish hourly fair value gap right here. Price clearly retested into it, rejected very clearly out of it, and it seemed like we were overall bearish. Now, let's drop down to the 5-minute time frame, because now I want to show you my actual entry in itself. So market opens here at 2:30, and we can see that after market opens, price comes up higher and it sweeps out this high. Now, this high isn't just any high. Now, you need to pay very close attention here, because I'm about to teach you about a very, very important concept. You can see that we have this high right here. Now, this isn't just any high. Is this liquidity? Yes, it is liquidity, but is it just any ordinary liquidity? No. This right here is engineered liquidity. Reason being is because we have this bearish 5-minute fair value gap. Price tapped into this fair value gap and rejected from it, leaving this high. This is now engineered liquidity. And that is why we can see price comes up higher, sweeps out engineered liquidity, refills in this imbalance, and then it rejects from there. Not only have we done that, you will notice I have this high and a higher high. SMT divergence. If I head over to the NASDAQ, we're going to see the opposite, right? Look right here. What can we see? High, lower high, bearish SMT. That tells me right there, we are going to get a reversal. And that is exactly what I wanted to see, because I knew that we were going to come down to take out that 4-hour low. So once we got that bearish SMT, once we swept out engineered liquidity, once we rejected from this 5-minute fair value gap, I said to myself, you know what? I am now comfortable to drop down to the 1-minute time frame. Let's see what setup we can form. Now, we can see price then gets this strong rejection to the downside, and then we get this push higher. Now, this push higher isn't just any push higher. Let me show you what this push higher, symbolized to be. We can see that we have a bearish fair value gap. Nice, right? That's great. Price comes down, comes up, taps into this fair value gap, and we're expecting a rejection. That's great. But what else do we have? Well, equilibrium, which by the way is the best confluence in trading. Well, if we mark this out from the swing high up to this, down to the swing low, right? So from this high down to this low, where does price retrace into? It retraces perfectly into equilibrium. You can see the 0.5 region, price comes in perfectly into this discount. As you can see, once we tap that discounted zone, bang, we get this beautiful strong rejection. And I am now thinking to myself, you know what? This is a valid entry. I am comfortable enough to take this, and I am going to take that sell. And that is exactly what I did. I took this sell position, targeting that 4-hour low that I mentioned earlier, and bang, as we can see, price ended up dumping right as we entered. It swept out this low. Once price swept out this low, I said to myself, no, not in fact once price swept out this low, once the NASDAQ took out that 4-hour low, I took out partials, and then I held the rest of the position. And yeah, I closed out the full position where you can see this arrow right here. So that is how I made $2,700 today. I want to show you something else, because not only did we have all of those beautiful confluences, which gave me the confirmation of that entry, we have a very, very clean setup on the NASDAQ. Now, have you heard of AMD before? Accumulation, manipulation, and distribution. Well, if not, I'm about to explain it to you. And if you have, well, let me reinforce it to you. What can we see here? All right, what is this? This is chop. This is where price is consolidating and we are going side to side. This is what we also know as accumulation. After we accumulate, what can we see price does? Price rips higher. When it rips higher, does it just rip into any zone? Well, no. Sweeps out liquidity. What else does it do? Taps into this 5-minute fair value gap. I'm starting to think, quite nice. That's a good area for reversal. Then what can we see happens? We can see price rejects perfectly from it and it distributes to the downside. Accumulation, manipulation, distribution. This right here is a perfect example of that. Not only did we reject from, after we manipulated, we have a bearish SMT. I mean, bearish SMT plus everything else, it was destined to go down. And that is why we can see on the NASDAQ here, we get this huge push to the downside. And obviously I took the trade on the S&P 500. You may be thinking, well, Seb, why didn't you take it on the NASDAQ? The honest answer is the NASDAQ was more bearish. Sorry, the S&P 500 was more bearish than the NASDAQ. I felt more comfortable taking it on the S&P 500, but ultimately it doesn't matter what I take it on because the setup was great on both. And yeah, this trade ended up hitting, making me just over $2,700. It was a very clean trade. It could have made more if I didn't take partials, but taking partials is just simply part of trading. It's good risk management. And yeah, we had a losing day yesterday, so a winning day today was amazing. It was just what we needed, and we will go again tomorrow. Well, yes, I do hope this video did help you out. I hope this trade recap showed you how it was that I caught this sell. It wasn't the most complicated. SMT, fair value gaps, equilibrium, target liquidity. I mean, that's the setup that we want to see. Thank you guys for watching. Appreciate you if you watched the full video. Please drop a comment if this helped you out. Let me know. If there's something that you still don't understand, drop a comment and ask me. And yeah, show some love. Subscribe, drop a like if you haven't yet done so. And I will catch you in the next video. Peace.